It's April 2021 here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, earnings season. With the first quarter of 2021 now in the rearview mirror, it's time for companies to begin reporting results, and expectations are high given that just a year ago the U.S. economy fell into a deep COVID-induced recession, which makes for quite the base effect for year-over-year comparisons. With the operating environment considerably better than last year, Refinitiv estimates earnings growth of 24.2% and revenue growth of 8.5%. 9 of the 11 sectors are expected to see an improvement in earnings relative to the first quarter of 2020, with just energy and industrials expected to show a decline. Consumer discretionary and financials have the highest growth expectations at 99% and 68.9% respectively. Number 2, Bidenomics. On the final day of the first quarter, President Biden announced a massive $2.3 trillion infrastructure plan to re-engineer the nation's infrastructure. In what was touted as a, quote, once-in-a-generation investment in America, the plan will have implications across a number of industries, specifically those with a focus on addressing climate change. Electric vehicle makers, semiconductor manufacturers, broadband providers, and renewable energy companies, just to name a few, all stand to benefit from the plan and will in most cases stand to receive subsidies should they meet certain conditions, which could include the stipulation that they hire unionized workers and in some cases target specific communities. But as we all know, the plan requires funding, and it appears the target of this funding will be higher corporate taxes and tax hikes on wealthy individuals and families. The president's proposals, however, hinge on the Democrats' ability to garner simple majority support through the budget reconciliation process. Should the proposals pass, we'll see how the market reacts to rising taxes, which means lower corporate profits. Number 3, investor euphoria. The Fed's unwavering commitment to accommodative policy and fiscal policy that continues to dole out free money to the masses has created a sense of market euphoria, with investors across the board feeling invincible to any potential market downturn. Despite a series of hedge fund collapses, extreme equity valuations, and margin debt near record levels, investors are sticking to the buy the dip mentality, continuously driving equity markets to new all-time highs. While accommodative policy and helicopter money are likely near-term positives for the consumer and the stock market, the long-term implications are cause for concern. We continue to focus on the fact that the highest correlation between stock prices and expected future returns comes from valuations, meaning that as the market gets more and more expensive, prospects for future returns continue to decline. Investors as a whole, however, appear grounded in the notion that, quote, it's different this time. And that's been your Market Minute for the month of April. Thanks for listening.